Okay, so let's go ahead and take a look at a couple trades. Let's just think about it like this. Just a couple trades. Today it's Tuesday, June 13th, 2017, and the FOMC, Federal Reserve Central Banky, they're going to speak tomorrow. They're in a meeting right now, and so it's kind of got the markets. The markets are kind of slummy. There's not a lot of up action. There's not a lot of down action. It's just, you know, kind of snoozing. And that's how it is every time we get in within 2 days smell of that place. Okay, so here's the ES. I don't see anything good here. I can start to mark lines, but it doesn't appear to be any big hits. Okay. So let's say that there. I would like to see some more data. Yeah, it does appear like we're gonna sink a little bit there, which makes sense, right? So here I'll put this down here for you. Now this is on sim, it's not on the real money, okay? So I'll just say that. But this is the S&P E-mini, and this strategy is okay. I've got the thing at 4 ticks back, okay, but the ES I'm gonna go ahead and put it back. Let's see. I'm going to put it back about... I'll go all the way back here on the ES because that's how it's been acting lately. I'm going to go back to up to 30... Oh, wait. These are $2 handles. So... Okay, from 34.25, 36.25. Yeah, that's fine right there. Okay, so that's just pay attention to the chart right here. See there, in between each row is $2, so it's $2 handles. And I'll talk you through this thing. Now, I've got $2 back or 8 ticks back. I usually don't recommend that, but on this ES, it's kind of where you got to be if you're going to take a trade. And the ES has become more of a probably a maybe a, what do you call it, intermediary trader to advanced trader. If you're intermediary, then you've got capital and you can afford these 8-tick kickbacks all the time, right? Because basically the way you've got to figure is that every time you put on a trade, you got to be able to afford the loss, okay? Now, there's ways to actually fund that loss. Like, I can have another trade going on at the same time right now. And then I can just pick, little giblets off that chart. And then I could actually pick, like, 1, 2, 3, 4, 5, 6, 7, 8 ticks if this thing wants to range. Like right now, I could have taken, that much right there. That'll pay down a little bit of this debt if this is a bad trade. And then if it's a good trade, then it's just a bonus and it can kind of go towards to the next trade. But in general, rudimentary financing strategy is not charting. It's kind of basically scheduling physical numbers, okay, so that how do I say it? It's like a spider web, okay, and if you don't make your spider web right, okay, then basically whatever you're trapping is just gonna go right through you, right? No matter what. you could do really well. You could be a really good chartist. You could be a really good researcher, but something's always going to come up, and because you don't set up and schedule all your things correctly, you know, what's going to happen if this happens? How you gonna compensate for this? How you gonna, you know, how you gonna work on this problem? What kind of strategy do you have for that problem? Do you not have a strategy for that problem? And it's just all a bunch of triggers and switches that are working in sequence, and basically that spider web is really just a bunch of gears and switches and pistons all working in synchronicity. And see there? See? So that would have... what I usually do here is this. I put another dome on. Okay, the dome, right. I put another dome on. And what I'll do is this. So this is a little bit too late. I mean, this is pretty much foolish. But given how this thing behaves, maybe not. Oh, it's the wrong market. So, excuse me. Here we go. So, what I'll do is, let's see here, Andy strategy. How did that get on there? I'll close that out. So I'm just giving you an example. I mean, this isn't how I actually trade. I don't trade all goofy like this. Let's see here. Albrook's strategy, bear short Andy strategy, bear short Andy strategy. Okay, yeah, that's it. Okay, so essentially what? Look at that. Do that, and so if basically. Yeah, I got to zoom that in for you. Yeah, that'll work. Seems to be acting like the bottom of this bar right here is resistance. So it's ranging in there. Now here's the thing. What I'll do is I'll focus on this trade down here. Okay. And, you know, it's kind of, it's not really like a bullish day today with the FOMC tomorrow. And, yeah, you know, so, and we're just kind of hanging out here, low volume and everything. I mean, it's a real quiet day. Where the CNBC is in the NYSE stock exchange, it's very quiet today. So that kind of tells you what the mood is in the market. And this thing is about to head on down. Now this has turned from green to red. I'm still anticipating. What I'll do is let's see here. I'll mark it 31.75. So if we break through there, then we got this. Now, what I'm trying to say, I eventually get around to it, is that if I put on a short, where did I put on a short? I put on a short here in the middle, right? And really, I'm not taking my time, but really what I should be doing is I should be working this trade back up. And so this right here, I should have taken advantage of, right? So I actually entered a short trade here, but if I can enter a short trade up here, that would be perfect. And then if I would have done that, okay, that would have advanced me, right? That would have advanced me too, but I'm still holding on for the one that drops down in, right? So what do? I take the profit off of that second one, right? From that I bought up here. Actually, I shorted from up here, and then I bought it back down here. Okay. And then I would have held one on. But actually what would happen is the way the platform works is that it would have kicked off the first one. Okay. And then I'd be holding this one. Okay. So you've actually got to do it more than once to get that profit. Because what's going to happen is that first one, right, was bought here, or actually shorted right here, and then it ran down, and then I covered even, but I'm in up here, right? So now I'm in back farther. I didn't really profit, but the thing is, though, is that if this is a bad trade now, not a big deal. Not only that, right, because if it's a bad trade, what's going to happen? I'm not going to lose anything because this is where I shorted now, right? This one is out of the question. Okay. So you always got to think of things where if you can eliminate loss somehow mechanically in your spider web, in your machine, okay, where you schedule your different things, your different orders and everything. It's an engine. It's got all the moving parts, switches, pistons. So if in that arithmetic coliseum of action, right, it's canceling out debt, right? Think of it like a sound wave, and so if you bounce a sound wave off of one wall and then you bounce a sound wave off of another wall, okay, the opposite of it, when the two sound waves come back to each other, they're going to cancel each other out. It's just mechanics, right? So that's the kind of thing you got to kind of think about. It's kind of like the, I've really got to hone down how to explain this, but it's kind of like the thing where Benjamin Franklin is famous for saying a penny saved is a penny earned, right? Very famous quote. And the meaning of that is that if you can do the work to save the money, you have done the work to make the money. It's the same thing. You've got to, in business, business and finance, you've got to constantly think of the inverse. This is actually a science. It's actually a job. If you were an architect or, a carpenter, you've got to think about the science of the the way that mechanics work when things press down on themselves to know if that's going to be sturdy enough or not, what's making it sturdy. You got to know those things. You can't just guess at that stuff, right? And then when you get into really big edifices, then you've got to know the actual physics and the sciences there. You need to take a course in that kind of thing. And, it's kind of spooky physics. It's stuff that you don't see inherently, immediately when you're born, right? You think it's just buying stuff and then losing your money, right? It's not, okay? It's not just buying stuff and losing your money. It's also saving stuff, which is making money, right? So you got to think of debt in a mechanical way, in kind of a spooky physics way, and get used to that, and then start to try to see everything like that, because that's going to advance you a lot. Basically, the way you're born, you think of everything as buying and spending, or earning and losing money. Okay, and that's kind of like a duck with one paddle foot. But when you get into business and finance, you find out that it's not just that, it's actually there's another foot, okay? And so what happens is until you figure that out, you kind of spin round and round in a circle, and you're working, and that's great. People doing wonderful things don't ever learn this stuff, and that's great. This business is for, finance is for ambitious people, that's for sure, hardworking and ambitious people. but it's not the greatest people. You'll never be remembered for this. You might be remembered in your family, but you won't ever be remembered in history for being a excellent, great finance person, because your job is simply to cater to the greats. That's what you do. You service the greats, right? And the greatest finance people are required to finance the greatest people in history. Okay. But, it's the same with the carpenters. The greatest people are working in some great, buildings and houses and things like that. But does the carpenter ever get, does the carpenter ever get approved for some namesake of some kind? No. So, and that's just life, right? Now, the thing is, though, is like I'm saying, though, if you can get the additional comprehension here, you're going to have more torque. You're going to make money faster because you're going to cut out losing money. Now, this is the thing in finance. The more money you can make faster, the more capital supply, right, that you've got to invest, meaning that your principal's greater. Well, the thing is, if you know what you're doing and you actually work, then the percentage that you make every year may or may not stay the same. It may get better. It may decline, but let's say it stays the same. The percentage of ROI, or return on investment, may stay the same every year, but as the principal grows, the amount of ROI, the sum of ROI, increases. You understand? So if I have $100 and my ROI is 25%, excuse me, well, that's $25 a year. But now if I've got $500 and I invest the $500, let's say, I wouldn't invest all my money, but because you got to have some in cash, right? That's a position as well. And but the thing is, though, is theoretically, $500 invested now at 25% is $125 profit. You understand? So, and if I go on up, I've got $1,000. 25% ROI in that year is what is it? $250. You understand? So, and then you just keep on growing that principal. But if you're not able to keep the leaks out of the boat, then that's going to be some trouble, right? Because you're gonna lose what you're trying to carry. Well, it would have paid off here. See there? Now, let's go back to what I was saying here. So, I shorted here, and then I shorted here, and the price came down, and then I would have gotten out. Now, if I was doing like I'm supposed to, I got out on that first contract, okay, at break even, okay? So that's off the table. Now where am I? Right, if I'm back down here from up here, then I'm at a profit. But what am I doing? I'm waiting for this thing to drop in, right? So I haven't profited yet. I haven't realized the gain. That's realized gains is where it breaks through, and then I get out and I close the trade with a profit. Okay. So then I can actually move the stop up. This is the stop. I can move the stop up even further if I want to, right? And so now I'm not losing. If this is a bad trade, I'm not losing from here to here, right? I'm only losing from here to here. So I've cut my losses in half, right? And I could keep on doing this. I could do this forever, in fact, right? So just keep on building all the way up until finally you hit the top, and then finally your short trade starts working, and it just you're just gonna peel off money, but then you're gonna flip it over and work it the other way. Now, at some point. Or you take it off and you just look and see what's going to happen. Now, at the same time, on the other dome, then what I'm doing is I got in here on my focus investment. My focus trade is that I'm short here because I think this is going to break through. I don't think that this is going up. Okay. And so that's this one. This is the focus. Now, at the same time, what I do is I've got this. It's 4 ticks loss, 4 ticks profit. Okay. And I can adjust those, but I don't like to adjust this one. I can adjust this one maybe, but I really don't like to adjust it. Normally, if I adjust it, I adjust it back to 3 or 2. Okay. And so, what would have happened here is if I was doing the strategy right, I would have profited on this one right away. I would have profited halfway up, and that would have covered, right? I would actually be at a profit. When this thing came down here or whatever it did, I would be carrying a profit. And that's that. And then when it comes down here and it starts to show me this again, well, I'm going to try it again. And right now, where it's at right now, if I would have bought right here, then I would be showing a profit again. Okay, so that's the basic deal. And, like I'm saying, this market is kind of piquet-unish. It's not really all that exciting. Now, this is mostly for beginners. And generally, as beginner future traders, you're going to be, held on a leash. Sometimes you can't go over 2 contracts. Sometimes you can't go over 3 contracts. And until you're profitable with those 2 or 3, then you don't get to use anymore, And so I basically all my lessons are kind of applied to them, unless I say otherwise. By the way, I've got the profit target down here, 30 ticks, so that's just automatic. This is an ATM strategy. So I've got these ATM strategies. Each one of these has a target and a stop, just like this. So whenever I put on one, well, let's say I put on this strategy, which is 4 ticks stop, 30 ticks profit target. And then I've got this limit order here. So when price kicks it, it automatically puts that 4 tick stop and 30 tick target on there for me. And then basically this one is a different kind where it automatically gives me a 4 tick profit target and a 4 tick stop target or stop loss. Okay, see how boring this one is? It's the stock indexes are just really dull. Sorry about that. Take a look at these. Let's see here. Yeah, these aren't looking too bad, are they? If you can see through there, I think I gotta zoom this stuff in so you can, because this thing makes everything look smaller. But yeah, that move right there doesn't look bad. Look at that. So looks like a trend to me. That's almost buyable. I would put a buy right there. Well, first I would mark this. Okay. That would trigger my buy right there, right? Okay. So there's one right there. And oh, yeah, here we go. Yeah, I got to explain this. This one's pretty obvious. So if you've got a downward trend, generally this part of the day, the first third of the day, okay, especially the first quarter, on a normal day, not some oddball day, the price will come down in, and then when it goes down lower, if it's going to start to fall off here, you're going to see it bounces off of the resistance line, right? So wherever it showed support before, that's going to be resistance. Okay, so then it just trends on down, and then it would just repeat this over and over. But what happened was this thing popped up, and then it broke through this first of all. Okay, and actually this one's walking on top of that. What was supposed to be resistance, it's now on support, and then it comes up here, and now it's on top of this support, right? What's the difference? Well, support is I'm sorry about the throat thing. It's messing up everything. Support is this hump, right? So if the price went up and it made a hump that's pointing up, that's support. Okay, it's not resistance. Resistance would be like if price gets back up to here, right? Here's the high, or it's a significant hump. Right? This is not significant. Then it can double top there, right? Where it comes right back up there. Risk takers don't want to buy any further. They just want to take the profits and look for something else. And so then it loses support, and then it falls back down, and then it doesn't go any higher, right? It's called a double top. That's what it does. And so that would be a case where the hump or the high point is the resistance. But normally, if price is over this, okay, normally it's going to be support. And as you can see, that's what it's doing. It's made the hump into support, and now it's going higher. So what's going to happen next is this hump is going to become support too, logically, right? And then if it continues on up, then this will eventually become support as well. Now sometimes it takes a break and it'll come back and dip down and then go back up. You just got to kind of like ride with it. And basically the concept is that you just trade with what you can see, and you just stay with the in crowd. Okay, you're not the only one that's making the mistakes. If you're reading these things correctly, everybody else that actually knows how to trade, which is probably most people, at least most of the money in there is put in there by people that know how to trade and read these things and so forth. If they're watching this, which usually is the case if they're investing in it, unless they're computers, but then computers just do what everybody else kind of does anyway. The people that actually watch these things, because all they're doing is reading the volume, the order book and stuff like that. They're pretty much driven by people that are actually physically manually trading, or they're algorithmically trading, but they're trading with algorithms manually. And so the thing is that as the chart is developing itself, people are taking its cues, and they're going to follow the chart. And if the chart takes a different route than what it was suggesting, savvy traders will just switch out of it and go with it, right? We're just gonna adjust, right? So we've got our bull shirt on, okay, And then all we're going to do is take the bull shirt off and then put on some bear shorts, right? And then when it's time to switch back over, it's time to switch back over. It's just that simple. But the thing is, though, is you got to be able to kind of like paddle, like I was talking about. Like you've got to have the two paddle system. You know, you got to, if you've got a focused trade, right, and you think this is going long, well, at the same time, you need another trade somewhere. It could be in a different market even. You don't necessarily have to do it on this specific market. You can make a portfolio into really any investment vehicle you want. You just got to have kind of like 2 feet or 100 feet. You know, they do 100 feet. And it's actually more complex than any investor can actually ever fully invest their lives into. There's just so many different pretzels and tangles and ways, right? You just need to find your niche and stick to it. And if you want to be a big leaguer, a big star, then you just keep on learning more and more and more. Be profitable at everything you learn, and then you start showing the banks, start showing the money managers out there, perhaps get a hedge fund, et cetera, and then just keep on raising more cash supply to feed your system. And then as you're investing it, you're learning more, et cetera. But, as long as you've got a big enough strategy set to be able to take on maybe, say, $1 million or $100 million or hundreds of millions of dollars or even $1 billion, okay? As long as it's big enough and it covers enough markets and they're all paddling, right? So that whatever's not working is getting covered by another one or another series, right? Everything's covering everything else. So you're never falling below, your principal, whatever you start out with that year. Doesn't matter if you profited it or somebody lent it to you or somebody invested in you or whatever, right? So you're never falling below that principle. You're always either breaking even because you've got it all covered, all bases are covered, got all those duck feet are paddling, right? Or you're actually moving forward. Now, the only way you're going to move forward, right, is if you got all those feet covered. You got to have all your bases covered. And even if you do make a big profit, okay, but what happens when you don't have your bases covered? Well, then you're going to lose a big profit, and that's just how it works. But if you had all those bases covered, you'd just break even, right? So that's the mystery. That's the whole mystery. And it's not a mystery. It's just a problem that you have to understand and get used to. Now, what I was saying here is that, let's say, you were bullish here, right? Now, this is good right here, right? Because if you were bullish and you bought right here because you were triggered at this resistance line, you're holding a long one, okay? And this is an opportunity. So you could buy that. I would buy at that line right there for sure. I wouldn't wait until it comes down here because that's my line. It's the 34 EMA. I call it the money line or the harmony line. It seems to be about where the medium is in the middle of the street. Try it out yourself and just kind of watch it. It is telling after a while. I don't even have to explain it. I will though, but eventually it'll just sink in. I see, and I'll explain another time. So by that right there, right? So I've got one long here, I've got one long here, right? And now I can actually get rid of the long. One of the that first long, dump that. So now I'm neutral, right? I'm actually profiting right here, but my stop is actually somewhere down here. Okay. So technically I'm neutral until I realize the gains, but at least I don't have a negative number on my dome, right? So at the same time I'm doing the duck paddle, okay, and I'm trying to, pick giblets off of this thing, and so that way, even when this trade goes bad, then I'm not losing anything at all. And then as long as all these trades, well, I wouldn't say it's going to be 100% loss free, but I would say it'd be something in the range between 75 to 90, 95% loss free. Okay, as long as you're working and you understand the strategy, it can be kind of like an invisible thing that I'm talking about here, and you can't quite see it until maybe you review this a couple of times and go through my other videos and write it down. Write it down, sit down alone, quiet, with your notebook or your spreadsheet on your computer or your phone or whatever, and then basically kind of like draw it out. You got to sit there and think it out. And as long as it takes, do it. It could take you days. Maybe it takes you months. I don't know if that's possible. I mean, if you're really busy and if this stuff is so new to you, it could take months. I don't know. I mean, you can learn a lot of other stuff in the meantime, right? You're still researching this stuff, still practicing this stuff. And then, you wind up with the answers eventually it comes to you, right? I mean, this is kind of like burning alcohol, right? You can't see the flames of burning alcohol, but if you put your finger down there, you can feel it. And that's kind of how it is when you come to this business. You can't see the walls of the racetrack, but as soon as you run into the walls, you can feel it, especially if you got real money on the line. But you know what? If you're just sim trading and you're hitting the wall and you're not profiting, it's the same thing, right? It's that invisible fire because it's burning your time. The less money that you're making with more time, the more it burns. So you get the walls of the racetrack all burnt into you, and then you know exactly where you're starting to get burned. And so them's the burns. And the thing is, though, is after you've seen it a million times, you just start to think like, well, I could be profiting on that. And so that's where I get this duck paddle thing, right? So I'm profiting. I'm getting I'm getting better prices on my position, okay, and I'm profiting in the range back and forth. After a while, you just get kind of sick of sitting there and waiting for your trade to work out, and you keep on thinking, I could profit on that move right there, right? Yeah. So if I triggered right here, right, what's the chances of the thing headed back? Pretty good chances, right? So not only do I put another long one on there, right, but I actually shorted this at the same time, and I grabbed a couple of ticks on the way back. See, so I'm already funding that trade, right? So I'm not borrowing, and then, you can borrow, and you should borrow if you know what you're doing. But I'm not borrowing and then hoping this works out. I'm actually working and I'm funding this trade, right? So that's how I work. That's my job. I got funds right here, and I got this. Now, what happens in the worst case scenario, though? Worst case scenario is this. I trigger a long focus right here. That's the focus trade. And then I put in a short, giblet catcher right here. Okay. And what happens is, let's say that it pops up and it knocks out this side strategy. Okay. And then it drops back down and it knocks out my focus trade. Now, is that going to happen? Yeah, it could. It could just fall right through it, right? So, and when it comes back down to my stop, I'm going to pick up another one, which will lose a couple of ticks too. So it's like that one loses a couple ticks, this one loses everything, and this one loses a piece. But you know what? You know how often that happens? Not very. It doesn't happen very often. So the odds are down. You got to work with the odds. It's reality. Okay? That's physics. It's the way that the land is shaped. You know, you can go around what's in your way. And general rule of thumb is that this strategy is more right than it's wrong more times. And I mean like 75 to 95%. I don't even mean 50-50, you know, and then it starts funding everything. Okay. And you can see that it actually worked right here, right? So this one worked. The one on the ES, the E-mini, S&P 500 E-mini, I'm sorry. That one worked, right? So you can see it's that's how it's going to be. It's going to be working, all right? And so even though I triggered right here, you know, I got in lower down here. Okay. And all this is gain, right? So, and then I also picked off a giblet right there, right? So you can see it's just a 3-part system. You just keep on paddling it, you know, one funding the other. And eventually, if you just keep on doing this, okay, reading the charts, keep on doing this in the same market, eventually it's going to come to you, maybe not the first year, maybe the first year, I don't know. But eventually, as you keep this job, eventually it's going to come to you, and you're going to see how you can spread this kind of strategy out to other markets. Forex, bonds, stocks, options. You're going to include margin. You know, you're going to start to borrow. You're going to rotate cash positions. You might get into real estate. You might get into buying businesses, products, invent stuff. I don't know. You know, and then you can kind of start to work that into your own home budget, you know, or your own personal business, your service, whatever you do. Maybe you make woodwork, or you do classic car mechanics or something like that. So, you know, this is transferable. It's interchangeable, not only in markets on Wall Street, but with everyday, with everyday life. Well, this one really makes me leery, and the reason why is this quick tail right here. This is on the NASDAQ. I'm going to check that S&P again. Yeah, see, this is what I don't like about the S&P. It's like they know exactly what I'm doing, so I quit trading it. I think that the algos and everybody are just so in tune with the crowd that they kind of know how everybody thinks, and it seems like on this market they can always pick it off. It's like you're on a bus and the driver is trying to get you killed in all of the traffic that it possibly can. So, I was short on this. I told you how I was working it out if I was doing it right, what I was talking on here, so I didn't get it all done. Now, if I would, what I would have done, right, I would have moved my stop up to here on this one, right? So as soon as I got in a position right here, I would move my stop up here, and so that would give me some room there. Okay. I would think about buying that right there, or at least that right there, right? Because you got that right there. So buy a piece of that. Could have caught a couple of ticks off of that right there. Would have caught a couple of ticks. off of that one right there and that one. So on my side trade, couple ticks there, couple ticks there, couple ticks there. I wouldn't even hold on for all of this on my side trade because a lot of times basically it just comes back down at you and then you lose what you've got. So you'll be holding 3 or 4 ticks, then it comes back at you and then you're not holding any, and you could have had that, and that's the whole point of it. You're just collecting on what you could have had. You know, it's kind of like you got a basket, okay? And you've got money floating in and out of the darn thing, right? You got trades on, okay? And you can see money come in and then it goes away. wait, why don't I get that? And that's exactly what the side bet is about. That's what the side strategy is about, okay? So you're not just holding on to a focus trade while this stuff washes in and out. Then you're also, you're also picking the corn off that cob, just nibble piece by piece. And, keep funding yourself, keep funding your focus trade. And capturing some of that stuff that's washing, see, this is what happens. This is why I don't trade the S&P anymore. Look at that. Could have done it. Could have been all right, but this is why I do the second tier strategy, right? Let's do this. It's going. Now, if I'm only working on 3 contracts, or maybe I divide 100 contracts up into 3, whatever the case is, I've got to realize that, that there are limits here. Even though I'm convinced this is about to drop, if I put on my full position, what'll happen? Right? It's going to kill me. See this right here? This is exactly why I do not trade this. See, these people that are managing this price right here, right? They are in there. There's lots of them. They know what the thought mechanics are. They literally know. And I'm not kidding you. This isn't some superstition or anything. I've studied these people for so long that I know the business, right? It's like eventually if you study a business long enough, you know all of the industry, you know all the people, you know all the strategies, you know all the parts to it. That's what they're doing. See how it looked very convincing? Right? Looks pretty convincing to me, right? That's the thing. Whatever looks convincing, they're going to nail it. And the thing is, too, is to tell you the truth, the volume is so low right now because of the Fed. It's really easy to game. If the volume's really thick, it's harder to game, but they still can. Right? At least you've got a chance there. You can't even be quick enough to game a volatile, low liquidity market. There's just no way. Now you can be strategic enough not to lose everything, but there's no way you can be quick enough unless you've got computers. If you've got algos doing it for you and you've got enough capital supply on the account, to give it enough room to do whatever it's got to do to move around, then you can do it. But in an illiquid, gamed up market like the S&P 500 E-mini is, for sure, when it's illiquid, even when the liquid's good, it's still gamed up. But you can be quick enough, on the minimum. I'm not talking about big leagues here. I'm talking about the minimum size player, 1 to 3 contracts. Okay. And the firms that start you out like that, they only let you get $500 drawdown per day. Right? So you can't be stacking on 3 contracts. and then expect to be able to fit in underneath that $500 drawdown. You got to stick with one contract at a time. The only time you can put on another contract is if it's the opposite direction or it's just a couple of ticks that it might lose. You got to really squeeze the risk down, or it's in a different market at the same time. That's the only way. And to tell you the truth, maybe not two markets at the same time, because that actually does increase the risk a little bit. Risk is it's like it's a season, okay? So if you only have a little bit of food, right, you can't put on a whole bunch of risk. It's going to be very salty, okay? And if you've got a lot of food, right, you can put on more risk, and it's going to be just right, right? So you've got to adjust. Now, it might not seem like a lot. You might be like, well, I've got a lot of money. I expect a lot of money out of this. Well, that's just too bad, because this isn't your year. You're going to have to crawl, especially if you're starting out at a prop firm and they're going to keep some of your profits, and then they're going to slowly give you more contracts and more funds to work with. But still, at a certain point, the only drawdown you get is the profit that you make. So it's all on you. After you start trading their money for real, they don't give you a drawdown. Your drawdown is your own money. All right, so you got to low crawl out of there, which means minimal contracts. It means less risk. You can't scale in. You got to be quicker on the draw. Kind of like you're in North Fork, New Mexico, and it's hell. There's gunfighters everywhere. You gotta be faster than these markets, or you're just a dead duck that ran out of money, right? Until you low crawl it, you can't be expecting. All you gotta do is just take little bits at a time, right? Just feed yourself those little giblets. And just keep on. It adds up. It actually adds up pretty fast. I mean, I really gotta say it like this, okay? You can be a millionaire doing this. You can. It's very easy if you're disciplined, and it doesn't even take a lot of difference. You don't have to be like super different to do just the bare minimum and make it up to a 7-digit, account with all the fixins around you in your life in not that many years, to be honest with you. But the first part is the test, where you've got to minimize the risk so much, because the risk is so much more in the beginning. First of all, you're not as savvy. Second of all, you don't have very much capital to begin with. See, one of the things about this business is that you need a lot of capital to spread out in all these different strategies, okay, so that you aren't losing. And it really crushes down your risk, right? So you may not make as big of a percentage if you don't want to, but you have such a big principle that the sum of profit for that year or whatever time duration is actually far better than what it would be at the other jobs, right? So 25% of 100,000 is what? 2,000? No. 25,000, right? 100,000 in this job is, piddly squeaks. All right, so I'm going to take that. Excuse me, I've got bodily mechanics going on here. Now look at the Nasdaq. That was actually a little bit better over here, and it looks a little bit less risky too. So, haven't looked at the Nasdaq in a while, but this does look a little bit tamer to me. Plus, that drop was a little bit bigger, I think. But what am I saying? Yeah, okay. So, 25% of 100,000 is 25,000, but 25% of a million is 250,000. Okay. Now, can you survive on 250,000? Sure. And in 10 years, how much are you going to have? You're going to have something like 2 million more at that rate, right? Maybe even more than that if you're not blowing it. But do you need 25%? Why not be even safer and just accept 10%? What's 10% of a million? It's 100,000 a year. 100,000 a year, and you'll never lose it, right? Like, it's so easy. You almost just dreaming your way through it, right? Because you've got the risk so tied up, and that horse is just staying there for you. It's there. Wherever you go, it's just outside on the stiff, tied up. Right? Perfect. Okay? Nothing dangerous. There's no chance of it getting lost or anything like that because you figured out how to manage the risk. You're not going for home run risky trades and stuff like that. Which take a lot of work on your part, which means that, there's more moving parts. There's more things you got to know. Therefore, there's more potential to actually lose your principal or chunks of your principal, which winds up wearing down your profit, right? So those are the advantages. Now, what if you've got 5 million? Okay, let's say 5 million, and you've got 2% of 5 million. What is that? 2%? That's 20,000 times 5, which is 100,000, right? Now that's super easy. You probably don't even have to look at the thing but once a month. At that, I could fix it up so that you get 2% every month if you've got 5 million. But you see, you've got to work your way up to 5 million. So you see there's a retirement plan there, and it would be quick. What if you could do that in 10 years? You could easily do that in 10 years. There's so much leverage, all the technology, this internet, these platforms. This is all leverage. All the information on here, all the people on here that you can reach out and talk to. People are just divulging all they know. You can learn so much about the entire world. It's so much leverage. And which means that basically, like I said, you've got to understand that a penny saved is a penny earned. You got to understand that side of work. That's work. Saving, as in getting rid of risk, right? Or getting rid of unnecessary, is work. And so, if you use all this technological leverage plus easy borrowing, right? Because that's just the central bank kind of empire that we're in. Unfortunately, I don't ever attest to that because there is a catch, which you need to get rich to prepare for. You got to invest in hard assets, right? You got to think about accumulating power so that when they break down our economy, you're standing on something solid, and your money isn't just worthless somewhere in a an electronic hullabaloo. But the risk, that's the unnecessary, and you do what you got to do to save from it, and so you do the research on here. How many years do you think it would take to do enough research to do that? I would say just a few. Just a few. Within 10 years, you ought to be, you have to pass seven figures in 10 years. You just got to. That's just how it is. Okay, and one of the things you got to realize is that if you keep on following the news, you're going to find things like, look at Apple. It came and it went, and then they had the iPod, right? That was another buying opportunity, and then the iPhone, another buying opportunity. The Amazon, the Facebook. When the Fed started dishing out all that free money into the markets, that was another opportunity. The housing crisis, that was an opportunity. The dot-com boom, and then the dot-com crash. If you knew what you were doing, you could have rode that thing all the way up and then rode it all the way down. These things come along. Now you've got Bitcoin. That's the new one. Okay, so, within that 10 years, you could probably cop at least one of those. Oh, Tesla's one. So, and you kind of got to understand what's popular too. Why is Tesla popular? Is Tesla popular? You got to understand its popularity. You've got to understand why is a Facebook popular? Why is a Google popular? Right? And why are other stocks not as popular? And you have to understand that the more liquid they are, the more the in crowd they are. Wall Street is like a mall. It's not just professional colleagues in ties. It's tons of people with lots and with less. But whatever's popular is popular. If it's the in thing, and that's what they're talking about, they talk online in the chat forums, on Twitter, on Slack channels, you name it, at the parties, blah, blah, blah. And, if you're saying, yeah, you got some Netflix, well, duh, it's a no-brainer you got Netflix. But if everybody's in it and everybody knows it, then it's got even more money in it. And because there's so much money going into it, guess what? It's like a balloon. If you got some air and you put into the balloon, you got some balloon there. But if you got too much air, that balloon is just going to blow till, it's filled up the room. So those are the ones you got to know to get. It's going to be popular. Is it popular? It's staying popular. I'm riding this thing and it's going, going, going. Right? And when those things happen, then the professional institutions go, okay, this is one of those cult stocks. That's what they call it. Now, it may be a legitimate stock, but it's also a cult stock, as in there's a lot of crowd in it. It's popular. It's got a good street name, a good Main Street name, a good Wall Street name. Everybody's tossing it around. It's an in-style thing. They realize that. That's their job. They read the minds of civilization. That's what they do in order to anticipate civilization's moves. Okay, so then they're going to add their billions. Okay, and so then the balloon gets bigger than the house. Now, if you knew that, if you're used to this, You know, you knew that, okay, well, it's a cool shirt, but on Wall Street, it's a good business. And a cool shirt on a good business on Wall Street is a birthday party balloon that becomes a house, right? Like you could buy a house with a small investment in it, right? Okay. So there's those opportunities. Okay. And, crashes are also opportunities too. You can take advantage of those. There's ways you can put positions and that kind of thing and catch the break lower. You can program an algorithm that catches that kind of thing. Not only does it catch the low, right, the drop, it also catch the pop higher. So when it stops, it starts to go the other way. Okay, it's writing that too. So that's two trades you got there, and it's done automatically. You didn't even have to know it. Could have been swimming the Bahamas. There's all kinds of stuff, right? There's just so many things. And the thing is that there's so much, you just got to keep on finding more cash supply, right? And here's the catch, though. If you ever burn people, okay, it'll spread because that's how the community is. And the more money that you burnt on somebody, the you got to find a way to pay them back and pay them back twice as much. See if they'll give you a break or something, but you've got to really make it up, and you got to have that badge of, penance for your crimes. Otherwise, your reputation is burnt, and it's hard to live down. I think you can, maybe. You just don't want to take that risk. So if you're borrowing up and then you start losing up a bunch of stuff because you didn't do the work or something, right? Well, you pretty much get a one-shot deal in your entire life. So figure it like that. And I always say this: if you're gonna be a millionaire, do you have to be a millionaire tomorrow? Can't you wait till next year? Because that's all it's gonna take you. It's gonna take you to wait till next year. Can you at least do that and not take the big risks, right? Don't push the envelope. Work, yeah, it's all research though. Study, practice on sim, talk to people, research what they're sharing and everything. Scan, market to market, region to region, culture to culture. Look at history. It's all right here. Just keep on doing that. Stay in the loop and try to stay out of the market. All right. And so when that capital or that opportunity comes along, you got a place for it so that when the opportunity comes along, you haven't lost all your money. You got cash supply. Bam. You can take advantage of it. Right. If you haven't burnt everybody because you were talking yourself up, but then you wound up taking in a bunch of money and then losing it, right? And then cash comes along, you never know what cash was coming along, and then found out, and then you're burnt. So take your time. These things are going to happen. It's just part of the job. It happens. But this is not something like a sport or a labor job, okay, where, the harder you do it, the more you get, right? So if you just tap the little ball at a baseball game, well, you're not going to get anything because you can't make the people stand up. So if you really try, okay, and you knock it out of there with a 20 millimeter round, and the crowd hears that boom fire off and sees it sails out of the stadium. They all get up. They're doing a wave. Okay, so now you're making money. Now that's how you make money. You hit really hard. You give it all you got, right? It's the same thing if you were working a labor job. If you can carry more, if you can last longer, if you can move faster, okay, then you're going to be worth more. You're going to get more. They're going to give you more chances. They're going to give you more credit. They're going to give you more trust. You're going to climb higher that way, okay? And that way. But in this, it's different. You just have to keep on doing it. You got to keep on shoveling down some coffee, stick to the learning. If you don't have a book in your face, you got an internet page in your face, you got a calculator nearby, you got a notebook nearby, you got a spreadsheet, you got social media, chat forums, YouTubes, Googles, all that stuff. You got trading platforms, you know the brokerages, you know the prop firms, right? You know the laws, blah, blah, blah. Just keep on learning. That's what it's about. Okay, now how do you relate to that? It's kind of slow, right? If you're thinking about it, I mean, if you're a running horse and you're used to the raging river of horses, right? Which I was. As a matter of fact, this was kind of hard for me to do. I had to basically take 2 4x4s, and tie them, hobble my legs. I had to, just basically bend my legs, tie them to 2x4s, and I can't run anymore. Right? Because that's how I had lived my entire life. I was a horse, and then this, and it almost seemed like a crime that I was doing this. But the economic climate out there is that jobs are drying up, and that Marxism is coming in. Those central banks have more power than any country in the world. They are the biggest, okay? And until something does something to take them out of the business, and so that they can't come back, because as soon as they disappear, somebody else is going to fit right in. It's like a mafia. As soon as you kill one, another one will show right back up, doing the exact same racket. And that's the environment you're in. And, they've got a lot more tech now. They got more money now than ever. They have more people and more institutions, governments, you name it, all around the world. More weapons, more chemistry, more psychology, more lying news, more lying education, rabble-rousers out there in the public starting who knows what. Okay, so are you really climbing the ladder out there? I mean, if let's say you're working for some carpenters, or you're working for a landscaper, or you're selling phones at the phone shop or something. Those kinds of jobs. You're working at the restaurant. Okay, are you really, really seeing that they're saying, hey, this person's going to be management someday? You got to think about that. Take Donald Trump, for instance. They were telling Donald Trump that he ought to be a politician. He ought to be a president. They've been telling him that probably since he was 30. I'm serious. They've been telling him that for so long. I've seen that on YouTube because I researched him and I looked at all of his interviews and stuff. They've been saying that forever. And so he knew he had that coming. He could do that. And do you have that coming? That's the difference. So if not, you got to kind of think about things. Not everybody is expert at being a boss, at climbing those ladders. Climbing into the expertises in other levels of the buildings in downtowns and industrial buildings. You might just be stuck, right, in the lowest position, or maybe just a little bit higher than the lowest position. You got to understand, though, that there's volatility in the way. right? There's a lot of things going on, and I'm not lying. And it's hard to believe, really. I've been researching this stuff for tens of thousands of hours. Okay. And I know the difference between BS, and I can see what's fact, and I can figure out things and piece things together, and I'm as honest with myself as rocks are rocks, right? I don't make truth. I just verify it. Okay. And then I piece everything together and get the picture. And I'm telling you, this, if you're not climbing the ladder, this is something that you got to think about. This is something that you've got to take care of and get the first years out of the way. Grab the 2x4s, hobble that horse, and get used to it. I didn't used to read so fast. I didn't used to write so fast. Now I write and read faster than anything. I can ride in a bumpy car or a bumpy plane, and I can hold my eyes onto a page like as if I had a suspension support in my eyes, right? My comprehension increased. It's just a matter of practice. Now, if you don't start now, then you got to start in a couple of years. You see, but then in a couple of years, it's going to be even harder, maybe. But then you still got to go a couple more years before you get to that level. You see what I'm saying? So if you start now, right, plan it all out, make the sacrifices, adjust and schedule everything, cut out all your costs and all that, make sure everything's taken care of, and make sure you can sail through it, okay? And just get through that part until you get to pay dirt and you start bringing it in. You'll be lucky if you can find a mentor that can take you through it, because they're kind of like the Daniel Boones and the Davy Crockett's and the Kit Carsons, the mountain men, like back in the old Wild West, right? They already know all the landmarks, the passes. They know where all the traps are out there, who's set up. They know how to talk to everybody. They know how to hunt and fish, where to get it, where to get water. They know all this stuff because they've been out there. They've talked to everybody. They've survived it. They've passed the test. They've been back and forth. They know the maps. They know all the tricks. Right? So if you're saying, well, I want to go to that one gold mine, but I ain't ever been out this far before, and who the hell has? Well, these guys have. They know exactly every canyon pass, every sinkhole. They know when things are starting to smell sour. So things are going south with these guys. We better veer off towards the right here. It's the same thing with these mentors in these markets. Most of the time, they just write a whole bunch of stuff. They make videos all over the place. They're at the chat forums. Go see them there. But a lot of times they want thousands of dollars, to mentor somebody. So if you don't have that, then you kind of got to go the longer route and figure out stuff for yourself. But you'll be lucky if you find a mentor. Look for them. Or just piece them together. You can take a little piece from this person and that person. And if you got enough people, then you won't bug one so much that they just try to ignore you, right? So you don't want to ask everything from one person. Spread it out. There's tons of people online, right? And get that first few years done. Figure out how you're going to scale yourself up to some 7-digit figures, and then trade that, and then figure out where you're going to take that cash and transfer it into hard assets, and just slowly, methodically build your power up so that way, no matter what happens, no matter what lunatic becomes a governor or a president or the dictator of the entire world, okay, you have something, okay, that you can liquidate at least to get you by, or to survive on. Maybe your land's not worth nothing in the kind of market because there's no buyers, but you own it and you can live on it. Not only that, you can start up some kind of help for the community, right? So they got some jobs, and you're also serving the community, so the infrastructure's up and people ain't dying and depraved. Kids is all right out there and that kind of thing. That's what this is about. So as a wise person, right? There's only 3 tiers in this society, and in this society, and not so in other societies. But in this society, you've got the wise experts at the top tier. You got all the fools in between. That's the biggest one. And then you've got the criminals, right? The people that'll kill you, lie to you, cheat to you, deceive you, scam you, watch you, and then take notes, and then figure out how to use you, how to turn you into whoever or whatever, so they can game you. Okay? So all those fools, they're going to wind up with a lot of problems, right? So if everything breaks down or whatever, or they turn old, okay, and they're old, or everything's broken down, and, you know, if they're living in a situation where the top tier is that untouchable tier, right? It's pretty dangerous. I've seen so many videos of elderly people getting beat the crap out of, all kinds of different things, killed, shot up, and these are people just doing it for fun. You don't want to be in those areas because the untouchables are on the top. Okay? That's hell. Right? That's what this is about. And you know what? If the economy gets crashed, guess what? And it can be for anything. It can be from the dollar. It can be from solar radiation. You name it. It can be from chemical stuff. It can be from international war. Who knows? That's the truth. You don't know. It can be anything. But, you know, if things break down and you're still living around with a bunch of people that have a broken infrastructure, well, you can be sure that that top tier is going to get mighty slick, okay? You know, it's going to be hard to stay up there on that top tier. You want to be in a position that that bottom tier doesn't become your master, doesn't become your ruler and say so, you know. You got to be in a secure area. You need supply. You know, you need infrastructure. You need security. Security implements, right? So all those things cost money. So that's what this is about. I'm going to cut this short, and good luck to you.